Hello friends, good morning. Welcome to my channel, All About Ireland. In today's session, I'll be walking through the Irish tax system. It's beneficial for both Ireland-based and out of Ireland-based people who wants to understand the taxes they pay to the government in Ireland. Without any further ado, I'll just jump into this. So with respect to personal income, there are two types of personal income tax rates within Ireland. One is if you're an employee. Two is if you're a self-employed person. In both cases, whatever you see on the screen is what the taxes are based on. For example, the two, Ireland's income tax is based on pay as you go, as you earn, basis where, the first 35K something is taxed at 20%, whereas the rest and above 35,300 is taxed at 40%. But again, this grade is different for different people. For a single person, it's 35,300 euros. Annual income is taxed, the first 35,300 euros is taxed at 20%, whereas the rest is taxed at 40%. But if you're a married couple with one single income, it's 44K 300. If you're a married couple with two incomes, it's 70K 600. Some people might ask, 70K 600 is just double of 35K 35,300. What's the difference? So in case of married couple, if one of the spouses works part-time or earns around 16K or 20K, so the rest of the benefit goes to the other spouse. So two incomes, married couple, you get 70K 600 as a benefit. And the cases where, if you're a widowed parent or one parent or surviving civil partner, in that case, instead of 35,300, you have 39,300 as the grade at which your income is taxed. And see below, you'll find personal tax credits. To be honest, I already talked about a lot of tax credits, but the two tax credits which are given to everyone, which I did not mention till now, that's called person tax credit and employee tax credit. Each value is 1650. So every person who earns money in Ireland, irrespective of their income, they get 3,300 as tax credit. But if you're also, if you're a married couple, the example which I just took earlier, if you're a married couple, you can take on the tax rate of your partner into yours. In that case, as I said earlier, it's 3,300 is common for everyone. You also get additional 1650 from your partner, which you can use in your own income statement. And for that to happen, you need to do a joint assessment. But in short, basically, that 5,300 is taxed at 20%. More than that is taxed at 40% for a single person. Apart from those taxes, you also have something called PRSI, Pay-Related Social Insurance, and USC, Universal Service Charge, which you pay on top of those taxes. As I said, it's a payee-based system. So first 35K, 20%, more than that, 40%. If you earn around close to 60K, you may be effectively paying 33% tax according to those rates. But because of PRSI and USC, the amount the government takes from you drastically increases. If you see here on this particular slide, PRSI is 4% and income no limit. So whatever income you earn, you have to pay 4%. But again, a few rules there, which I'm not getting into because most of the jobs people earn more than 30K here. So PRSI is 4%. Even your employer contributes. If you see above, the employers contribution is 11.05%. If it's income no limit, but if income is 398 per person per week, it's 88.8%. But I'm not getting into all those stuff. I'm just talking about personal income tax system here for you. So irrespective of income, you pay 4% as PRSI on your annual income. And if you look at USC, it's again, similar to payee structure, which is graded. Till 12,012, you pay 0.5% of your tax. Now, percent of your income towards USC. If your total income is below 13K, you don't pay any USC. But most of the people, as I said, any average Joe has a salary of 30K here. If it's 12,013 to 20,687 is taxed at 2%. 20,688 to 70,044 is taxed at 4.5%, and anything above that is taxed at 8%. When I say tax debt, it's actually the government which is taking the money, though the term they use it is as USC, but it's basically a tax which you're paying to the government. The good thing with PRSI is there are a few benefits with PRSI, and this also gives you the payments to PRSI also gives you state pension at the end. But for USC, I don't know, but uh, this one's something which we keep paying. But I may make a video on USC, why we pay USC and why we pay PRSI, but that's for another day. For now, you just need to see, you just need to know that there's not just tax, you also have PRSI and USC that needs to be paid. Same thing below there for self-employed people. On the right, if you see, for for any employed person, income over 70,044 is taxed at 52%, which is 40% normal tax, 4% PRSI, 8% USC. If you look at self-employed, income over 100K is taxed at 55%. So if you're moving to Ireland, please consider these factors when you are looking at your income and how much you get in hand, and how do you plan to spend your money. It's basically the in hand is what you pay towards rent, towards your groceries, towards your insurances, towards car, towards your travel. Just keep this in mind. I'll go through a couple of examples here. In this case, the first one is, Aarti. She's single and she earns 28K. 28K would be an average salary here. And as I said earlier, she gets a tax credit of 3,300, and 20% tax on 28K is basically 5,600. If I remove 3,300 from 5,600, it's 2,300. So that was supposed to be the tax she must pay, but again, the USC and PRSI, you see here, it's almost 80% of the tax that add up, and the total tax. Oh, sorry, my mistake that the addition is wrong, but the total tax is somewhere close to if I add 4120. So out of 28K, she pays 4100. Subtract 4,000 from 28K, so it's 24K. And 24K per month. If you divide it by 12, she gets 2,000 euros per month. Something similar here. I just went with someone who, sorry there, what was the income I considered here? Yeah, the income I considered here is 40K. Sorry there, excuse me for that. And as it's 20% till 35K, 300, she pays 7,060. Anything over 35,300 and less than 40K, she pays 40%. So 8,940, and her tax rate is 3,300. And subtract it, it comes to 5,640. But again, USC and PRSI take a great chunk of that income. She eventually pays 8,362 out of the 40K towards tax. That leaves her close to 31 something. And if you divide, it comes closer to 2,500-ish in hand. I also have a small snippet here. Like on the top, you have single salary. You have direct tax, which is 20% of 35K there, and 20% of 35,300 plus 40% anything above that. If you see here, the tax is almost close to 5 times, more than 4 times definitely here. But the income is close to triple the direct tax. Okay, and then you have tax credits. You have USC and PRSI, which the formula which I just explained earlier, and then the employee credits added up to tax credits. Tax credits are nothing but they are taken off your tax, and eventually you end up with net income here 2,90002. I mean, yeah. So 3 times salary, but the 3 times gross salary, but the net salary is just 2 times. The more you earn, the more you pay. As I said earlier, over 70K, you pay close to 52%. Yeah, this is the foundation of Irish personal income tax system. If you're an employee or employed, for more such content, please subscribe to my channel. And if you I have an income tax calculator which I created in Excel. If you want the income tax calculator, email to allaboutireland247@gmail.com and subscribe to my channel. And last but not least, this video is sponsored by careerlandnet.com. Please do visit them and get help for your job search. Thank you.